To Lagos, where we are joined by Akinwonuola Atitebi of United Bank for Africa, and let's see if he can give us an understanding of why the central bank decided to keep interest rates unchanged, even though we saw earlier on today numbers suggesting that inflation pressures in the economy are easing. 11.8% I saw the inflation numbers that we got today versus 12.3% the previous month.
Godfrey? Yeah, it's it's clearly in line with expectations of the market and what most analysts thought would happen. The CBN has kept faith with its earlier on traces with respect to its focus and direction. And the direction of the CBN and its primary focus is growth. And it has clearly chosen growth over inflation. Even though the inflation figures was sort of surprising, most pundits had expected inflation to head north. What we saw is CBN essentially keeping monetary policy eased as was began last year. Godfrey.
But is that a surprise for you, given the kind of factors that the government is tackling inside the Nigerian economy? And are we therefore likely to see the central bank maintaining that policy stance that we just saw them affirm today?
Yeah, I think monetary easing will most likely continue into at least Q3 2010. We could then see an aggressive hiking rates going forward, depending on growth data at that time. What we're seeing of the CBN, it's a CBN hell bent on powering growth and expanding credit into the economy. That has been their strategy from 2009. We think it's going to begin to bear fruit in the second half of this year, when most banks may start to aggressively expand their balance sheet. Godfrey.
What can we read, though, from the statement that we saw from Lamido Sanusi today? I didn't see anything that suggests that they might be a look at the interest rate anytime soon that might take it higher or take it lower. Did you see anything in it suggesting either move in either direction?
I don't think so. I think we will be where we have for at least another quarter. Depending. This is one CBN regime that is very agile on its feet. So if we get continued dip in inflation, we could then see a reversal of its policy stance. But I, for one, don't expect inflation to dip below 11% in the coming quarter, or indeed this year, given the expansive spending by the government. So with that in view, I would expect monetary policy to stay where it is for at least the next 2 quarters.
Indeed. Let's move on to the markets. The markets obviously cheered by that decision by the central bank, as we saw the all-share index looking up there 2.4% up on the day. Did you find any specific sectors particularly jumping today because of that decision?
Yeah, I was clearly the market was shocked at this decision. Not that the decision was unexpected, but the timing of it. As you're aware, a lot of this week has been characterized with decisive profit taking by investors. The announcement today may have reversed that trend. Even though personally, in my view, I would still expect profit taking to go on, but I don't see it as a reversal of the bullish trend we've seen most of this year. We think indeed with the expansionary fiscal policy and the loose monetary policy on that side, we think we would expect corporate profits to continue to improve. And with that in view, I would expect I'm bullish on the stock market. So for me, any profit taking, any deep profit taking is an opportunity to buy the market lows. Godfrey.
Yeah, indeed. When I looked at the numbers, I thought actually the index was going to end the week lower, and but obviously after that 2.4% jump, the market has erased the losses that we saw earlier this week. I don't know whether you've had a chance to look at the various divisions and see which sectors, particularly today, were strong, and perhaps we can read into it that perhaps investors are taking heart that the direction and the focus that's being given to the banking as well, sorry, not the banking, but the manufacturing as well as the power sectors could perhaps be cheering investors.
Exactly. I mean, personally, I was expecting of the banking sector, and I would have expected that to gain aggressively. That didn't happen, signifying continued concerns about asset quality issues and provisioning that may come into play for 09 Q1 10 results. That is what I think. I think key sectors that will benefit from this will be the construction for one. We think we may see the manufacturing sector grow aggressively. But aside that, this one policy is not enough, in my view, to convince investors to dive into the manufacturing sector. It's a sector plagued by severe power problems, and that hasn't been solved. The government is pepped up about resolving issues in that sector. But until that happens, I don't see an active play in that sector.
Yeah, in the central bank statement, I saw a statement saying that there was a growth of 6.8% in the first quarter. Now that was a slowdown from the previous quarter where we saw 7.4%. Given that strong growth still, I mean it's down, but it's still very strong. Which sectors do you think, and which stocks do you think perhaps investors should be focusing on now?
For one, I remain bullish for the construction sector, and in that regard, I'll be looking at the Julius Berger. As bad as the banking sector has been in 2009, I still believe we would see an aggressive expansion of bank balance sheets this year, and with the seeming improving tolerance of the CBN with respect to provisioning, we may see bank risk appetites improve, and that will generally feed into increased interest earnings. So I would be looking at those two sectors.